Is Bitcoin dead? Is it all over? Is this crash going to see all of those gains that you've made over the last few months completely disappear? That is the subject of today's video. We're going to be jumping into the charts, taking a look at the technical analysis. We're taking a look at the news, what is going on with Bitcoin miners, with the Bitcoin halving event that is just around the corner. And I'll be sharing my thoughts and opinions as to what I think the most likely outcome is for BTC. As I get into today's video, if you find it useful, smash that like button. If you're new, subscribe. Let's jump right down into the charts. So we're going to kick things off, guys, by taking a look at Bitcoin here. This is BTC paired up with USDT on the 4-hour time frame, and we can see, yeah, we have obviously had a bit of a move to the downside. Many people in the crypto space who are new, maybe haven't really experienced the volatility that we would normally kind of expect, have seen this most recent move at 16.67%. This has fueled speculation that maybe the crypto apocalypse is here and it's all over for Bitcoin. You've seen these videos out on YouTube, for example, and they kind of sparking that fear that maybe there's no more gains to be had. I'm here to actually counter that. Now on the channel, obviously we have a bit of a reputation as to always being kind of a little bit bearish. However, I'm here to actually counter that bearish statement and say, actually, things here are not looking as bad as maybe some influencers are trying to make them out to be. And so that's actually a pretty decent opportunity in my humble opinion. Now, we have seen, of course, this move here, 16.67%, and 16.67% can be quite scary and quite spooky to maybe new investors. Back in 2017, we actually saw a lot of corrections around that kind of 40%. And they kind of repeated themselves quite a bit during that bullish market. In 2021, we saw lots of 20% corrections, and here in 2023, 2024, so far we're seeing lots of 15 to 20% corrections. And so we're actually on the cusp of maybe another surge to the upside for Bitcoin, and of course for the altcoins as well. Now, as a lot of people are also talking about at the moment, they're taking a look at Bitcoin dominance really rising up as altcoins are bleeding out, kind of trying to paint a picture that money is rolling out of altcoins into BTC. I do not believe that this is the case. I do think, though, that there is a correlation and there's a lot of systemic automation that's going on in there. In this space as well. One crypto moves, they all move, right? There's lots of bot trading and things like that going on. And so you tend to find that altcoins have bled out quite a bit because ultimately there's not really a lot of appetite for altcoins in the market, and there hasn't been a lot of demand for altcoins in the market just yet. Historically speaking, this happens after the Bitcoin halving event, not before the Bitcoin halving event. And so altcoins have kind of moved up a little bit along with Bitcoin, but ultimately as Bitcoin's had this small correction, altcoins have bled out more. Lots of profit was taken off the table for those altcoins, as it seemed to be the most logical thing to do. This is something that we're talking with our members about only really a few weeks ago before we came over to Dubai. We were talking about whether or not to sell the entire bags or portfolio and then rebuy it back, for example, because a correction was overdue for those altcoins, and of course Bitcoin as well. So a 16.67% move here for BTC. It's not the end of the world. It is a pretty decent correction, but I still see us with a little bit more to go. So as we can see down here, we do have this yellow box area. This is our next kind of target range, 57,238 to 59,955. This is what we were talking about yesterday. And as you can kind of see, these are all the historical ranges that we've kind of been talking about and kind of been hitting into. This one kind of missed off, and we did have a slightly higher target for a potential run up, but this wick coming down here yesterday, or Saturday, late Saturday, this wick coming down lower than the previous low, that's a new lower low, that is basically a very bearish tail, but I do see us only with support being found down here at that $57,000 to $60,000 level. This particular range for me, it seems to be the most obvious one because it is a three-wave correction pattern, just finishing off, coming here, and then once this is complete, you'll basically be liquidating all those short positions that are now starting to stack up as we start to move on up into new all-time highs, in my opinion. Now, this could be a problem around the Bitcoin halving. We might find ourselves stalling out for a lot longer, but it's not every single halving event that we find ourselves with this kind of move where we just drop straight down afterwards. Sometimes we trade sideways, and in some occasions in the history, we've actually seen moves to the upside after the Bitcoin halving event, although I am very much unexpecting of that. I do not believe that that is something that we are likely to see. What I am likely to see, in my opinion, is going to be this continuation of the sideways trade. Now, as I kind of come back into this chart here, you can kind of see that we've just been bouncing between the high range and the low range, basically bouncing between the $70,000 and $60,000 ranges. Now, if I zoom out of this just a little bit, some people are now calling this a bit of a bull flag, and they're not necessarily wrong. I don't think they're wrong in the way that they're approaching this, but I do think that we need to be a little bit cautious with it. So, for example, they are basically saying here we have a bull flag. And what that means is that we have high volume taking us up higher, volumes drop down as we kind of trade sideways, and then from this we have that break up. Now, as you can kind of see from this depiction here, essentially what I'm really saying is whether you want to call it a bull flag or not, it doesn't really matter. This is a continuation pattern. And what we mean by that is that this area here is like just consolidation. It doesn't do much, it just kind of trades sideways, and you eventually have a break out or break down. And it's called a continuation pattern because you continue whatever pattern led into it. So in this particular case here, what we saw was a move up, continuation pattern sideways, we break up because that's the direction that led into it. So here we're actually looking for a breakout, not a breakdown. We are looking for those moves to the higher side for BTC. Okay, so from our technical charts, everything's actually gearing up quite nicely. Now we can of course continue to trade sideways for quite some time if we needed to, and still have that lower target that we're looking to hit. So there's no way of timing this necessarily from what I'm saying here, but chances are that we're going to be seeing a significant surge to the upside. The only way to kind of really invalidate that idea is if we completely break down lower than probably $55,000. If we come down towards 52, 53, then of course things are going to be very, very different from this pattern and this perspective. Instead, we'll be looking very differently at the market at that point in time. Okay, so from kind of technical charts point of view, things are not actually as bad as maybe some people are making them out to be when it comes to BTC. Why is the market down today? Well, we can see that there's a lot of different reasons and lots of different kind of explanations being thrown around, right? Crypto market has come down by 8.7% at the point of writing this article, which was about 16 hours ago. And, it's basically fallen down to, I think, 2.17 trillion in the past 24 hours. Now, as we can see here, Israeli-Iran conflict spurs risk aversion, and that's kind of the main takeaway here, because when there are things like wars and things like that that are breaking out, we do see a lot of riskier assets such as the crypto market, and people kind of wanting to avoid investing in it, pulling their investments out of risky assets like BTC, because they are going to be more volatile than others, right? So less risky assets. And well, we can see a couple of different things, specifically with what happened with the when Russia invaded Ukraine. We did see a pretty decent dip in BTC, and yeah, so we can see that there's correlation. People look at what's already happened in relation to past events such as war and conflicts, and they're basically assuming the same actions are going to happen again. And so as such, have pulled their investments, and thus kind of creating a self-fulfilling prophecy to a degree. But ultimately, risk on assets are a bit of a no-go when you see these real-world events occurring. Now, nearly $2.5 billion worth of crypto positions were liquidated since April 12th. So, it's pretty significant, and it includes approximately $964 million worth of liquidations in the last 24 hours. So pretty much across Saturday into Sunday. And so pretty sizable amounts of corrections in terms of liquidations have been occurring. But there's more to the story than just that. So Bitcoin miners could also be looking to dump over $5 billion in BTC after the halving. 10x Research has kind of come out with. Now, this basically could be a 4 to 6 month period where basically Bitcoin miners liquidate over $5 billion worth of BTC. Now, it's quite a sizable amount, and it would have a pretty significant impact on the market. Now, historically, this is exactly what's happened. Miners have had the Bitcoin halving event and then liquidated assets for about 4 to 6 months afterwards. What that's usually meant in terms of price action for Bitcoin is that we've seen either a dip in the BTC pricing, creating this kind of correction after the event, or we see a sideways ranging market where there's still an influx of demand that the miners are selling to, basically creating a highly liquid market and basically zero price action, no large volatility in terms of spike. Now, one of the things that is really important to understand, specifically when we talk about price action, is to talk about liquidity, okay? And a lot of people don't fully understand what liquidity is, but I'll try to briefly explain that for you guys here today. So basically, liquidity in kind of really simplistic terms is where buyers and sellers meet and they agree, okay? And it means that there's plenty of people willing to buy and there's plenty of people willing to sell, and they all agree on prices. That means that price is stable, okay? So a highly liquid market essentially is a stable market. And it's when we see an illiquid market that we see the volatility. And this happens for Bitcoin at specific price points, okay? So you can find things or you'll see terminology thrown around there about liquidity hunting as an example, because there's liquidity that is created inside the price charts at specific price points, and they can be very profitable for large investors to swing the market towards those areas. Okay, if they're looking to buy, they're going to want to bring the market down to those areas where the people are willing to sell, and so forth. And so when it comes to long positions, short positions, liquidations, that's all liquidity that can be mined by certain types of individuals, such as market makers and exchanges, as an example. Okay, so when we see, Bitcoin miners looking to liquidate, $5 billion worth of assets, it doesn't necessarily mean the price will go down. It could go sideways if there is enough demand to soak up $5 billion worth of assets. And if the ETFs do decide to pick up pace again, then that could be where the demand comes from. Okay, but again, historically speaking, we've seen a bit of a sideways ranging market or a dip after the BTC halving. Now, from a liquidation point of view, obviously we spoke about a significant amount of liquidations over the weekend. At the point of recording today's video, in the last 24 hours, it's been $221 million of wrecked positions. Majority are actually in the long category, but still we've seen a pretty sizable amount of short positions also getting liquidated. And this is because price went down, price spiked back up again, and basically the market makers were able to liquidate the longs and the shorts and basically capture $221 million of liquidations. Okay, it's a lot of money that's been able to transfer hands during these events, and so market makers and exchanges are making some pretty decent bank on the backs of retail investors at the moment. So guys, I wanted to kind of put a video together to say I don't believe that Bitcoin is dead. We might range sideways for a little bit longer, but ultimately we are looking at this as a continuation pattern, and we are looking for a very significant surge to the upside for BTC. Let me know what your thoughts are in the comments down below. And guys, why don't you check out this video right here where we go through a few more things for BTC.